On today's Hot Sheet, I'm discussing Spruce Point Capital's short on Zillow, plus the latest ADP Employment Report and mortgage applications data. Today is Wednesday, March the 6th, 2024. I am Byron Lazine, and the Hot Sheet starts now. Welcome back to today's Hot Sheet. I am back, and I hope you enjoyed Jeremy Knight filling in for me yesterday, and I hope you're glad that I'm back. I'm certainly pleased to be here. We've got a whole bunch going on. Of course, we've had a lot of drama in housing. This is the only 24-hour look back on housing each and every single day, Monday through Thursday. We do that live for all of you. And there's been plenty of, we kind of stay away from the drama here on the Hot Sheet. I can cover that in the Real Word Pod. I did a bunch of that on yesterday's Real Word Podcast. You might want to go check that out immediately after this if you're unfamiliar with NAR's new commercial releases for 2024. But there's a lot going on with commission lawsuits and NAR drama. And now we've got a little bit of, maybe, I wouldn't call it drama, but some of that drama impacting one of the biggest names in real estate. And financial experts have taken notice of this and are now placing bets on it. Zillow is a target of a short seller. Spruce Point Capital announces it's an investment opinion. They released the report yesterday, and strong sell research opinion on Zillow, trading in the NASDAQ under the ticker Z. Now, I want to be, First, I want to say this is not legal advice. Okay, so big disclaimer, today's show or any Hot Sheet show, not legal advice. Another disclaimer, I do own Zillow stock. I've owned Zillow stock for a long time. I've sold Zillow stock when it went up to $200 and made decent money. And, obviously I bought it at 20, so I 10x'd. Then bought back in as it dropped. Okay, I've been an advocate of Zillow stock. There's an interesting case here being made as to maybe not why to buy Zillow stock, but maybe even as to why some may consider shorting Zillow stock. Here are some of the key points on the Spruce Point report overview, and I'm going to react to an interview Spruce Point Capital did on CNBC. Zillow's core business model is under pressure from declining web traffic and growing industry litigation and regulatory risks that are poised to disrupt the real estate commission structure. Okay, we'll dig into that. I'm just going to give you the key points, and then we'll get into the video. Homes.com represents an underappreciated and growing threat. We believe Zillow uses various aggressive accounting and financial policies that can enable premature revenue recognition and margin enhancement. Spruce Point has serious concerns with Zillow's governance and shareholder alignment. We believe Zillow shares present a poor risk/reward with just a 5% upside to the sell side consensus target, while trading at an unwarranted premium to other more fundamentally sound internet businesses. Okay, so there's the 5 major bullet points that are inside this report. We'll dive into it a little bit deeper. Let's now go to CNBC, where Spruce Point Capital had an interview yesterday and really dug into why they are making this claim. Go ahead.
The CNBC exclusive is Spruce Point Capital founder and chief investment officer, Ben Axler. Ben, welcome. It's good to have you here.
Thank you for having me. Appreciate it.
I feel like Zillow has gone through some really rough patches in recent years in its life as a public company, but is on the upswing. Why now?
Well, Zillow has a long history. You might recall they merged with Trulia back in 2013. Fast forward 10 years.
That wasn't really a merger. That was
$5 billion of revenue.
An acquisition.
Guess what? They're at $2 billion. They pivoted into other businesses, the iBuying disaster, where they were helping flipping homes based upon their estimates. They wrote that
years ago.
They wrote that down. That destroyed $8 billion of value. And now they're pitching a new growth story, a super housing app. Ultimately, we think that's going to fail. And you don't need to take our word for it.
Okay, so the super housing app is what Zillow's been talking about for quite some time. And they're making the claim here, Spruce Point Capital, that it's going to fail. Now, Zillow has been talking about the super housing app, coming. And then in the last 6 months, Zillow has said the super housing app is here. It's called Zillow, right? So it's like, I think some people were confused. They were waiting for like a new app. And what Zillow is saying is, no, we're building Zillow as the super housing app. We're building everything into it now that they're getting more involved into mortgage and, tools for agents, tools for consumers, tools for agents like Follow Up Boss or Dot Loop, or, prior acquisition, or some of the tools for consumers or Listing Showcase, where they just have all these tools on kind of a flywheel that fit into Zillow on both consumer and on agent side. And that whole experience is the super app where you can do everything housing related on Zillow, because Zillow is what they're saying is the housing app or the super app. Spruce Point Capital believes that's going to fail. Let's go into more with the founder and CEO of Spruce Point Capital's thoughts on the Zillow stock. Which button? The one that you searched. Yeah. All right, there you go. Let's get it up.
Go. They just retracted their 2025 goals from their latest investor presentation. In addition to that, they projected 45% EBITDA margins. They backed off a timeline for that. They're only at 22% EBITDA margins. So we think this is a company that is generally disappointed and will continue to disappoint in the future.
I mean, it also trades on sort of the outlook for the housing market, which is improving with the idea of lower interest rates. So that might be a tough one to fight on that front.
Correct, but there's a few nuances there. So their biggest customer is basically buy-side real estate brokers, and that the real estate brokerage industry is under some legal pressure. So the National Association of Realtors just lost a lawsuit that could decouple commissions between buying brokers and selling brokers. Ultimately, what that means is we think brokerage commissions are going to come down. The amount of capital to real estate brokers to pay for advertising on Zillow is going to be reduced, and that's ultimately going to pressure their revenue and earnings outlook.
All right, go ahead, pause there. So Spruce Point Capital is making the bet that commissions are coming down. Okay, that they're confident in that bet. Now, I don't know, in the comments, maybe you could put, I don't know if you've ever been hit up by one of these, whether it's Spruce Point Capital or another capital investment firm, investment management firm, that has reached out to you and said, oh, I'll give you an Amazon gift card if I can get you on a call and talk about Zillow and what you know. And it's like, bro, my time is worth way more than $100 Amazon gift card. Trust me. If I was getting on a Zoom for a half hour, I mean, that's going to start at $500. And for me to share my insights, particularly on Zillow, I listen to all the earnings calls. I am a Zillow Flex agent. Before that, I've paid for Zillow. I know people at Zillow. Like, it's going to be a lot more than $500 even for 30 minutes. If you want, you're not enticing me with a $100 Amazon gift card, but they do a lot of research. Okay, obviously the commission research is easy to get. I mean, they could be researching that a number of different places, including now BAM.com, right? They could get that research publicly of what happened with the lawsuits, of what's going on with the DOJ. But that other ground floor research that they often reach out and try to get, from the agents, what I'm about to say might, if you're, I hope nobody here like took $100 gift card to talk to these management firms. It's kind of funny. But I guess what I'm about to say is, like, if you're the agent that values, like, okay, a $100 Amazon gift card to trade my time, it's probably not the agent that has the insights that you're looking for, is what I'm saying. If they're looking for an Amazon gift card, that might not be the ground floor data that you want from a Spruce Point Capital. Devin and Dustin Fox here from Fox Homes team. I received multiple calls for interview requests about Zillow from hedge funds. So he's getting the same experience here between travel and business. I wasn't able to connect, but they were very interested in our feedback on Zillow listing. Okay. So yeah, I mean, they're definitely interested in that feedback because they're placing enormous bets on where the Zillow stock is going to go, or is it going to go down? Is it going to go up? That they believe that the Zillow stock is worth $23 to $35 per share right now. Okay, so that there's a 40 to 60% long-term downside risk because Zillow stock is trading up over $50 a share right now. I think recently even at 55. Let me just I'll pull up Zillow stock, by the way, is up today. So Zillow stock is up over $55 today, up almost 1% on the day. I think it went down a little bit yesterday off of this news. So Zillow stock was in the last 5 days. What was the top for? Yeah, Zillow was almost at $58 here as its top mark in the last 5 days. Right now, trading over $55. Spruce Point Capital is claiming that it is a 23 to what was the number there? $23 to $35 a share stock. All right, let's go back to more of the commentary from the CEO of Spruce Point Capital on this.
Or just the way in which the housing market is locked right now. I mean, if we were to kind of a little more unfrozen, new listings ticked up, would that change anything?
Not necessarily. So another misperception that we think the market doesn't understand is they pivoted to a new model called a flex model. So traditionally, they've sold a lot of advertising leads. But now what they're doing is they're giving these leads away to brokers and getting paid if they convert on a closed sale. So that's a different proposition. And we think, based on our check, there just aren't enough trained brokers for them to convert.
Okay.
They're not disclosing.
Well, go on. Finish his sentence there. Go ahead. What he's about to say is they're not disclosing conversion rate.
What percentage of these are converting? And most importantly, they're booking revenue when they
So, interesting there. He knows what he's talking about on their model, the flex model, which is now where Zillow takes 40% on a closed commission. It's interesting that this guy, here's where I definitely think he's got something wrong. Ben Axler from Spruce Point Capital, he says, I don't believe there's enough trained agents in America to take on the leads that Zillow's providing. Zillow accounts for about 3% of total transactions, closed transactions across the U.S., and they want to get that to 6. They want to double that. That's part of their ambitions and their outlook. They talk about that in the earnings call. This guy, Ben Axler, doesn't believe there's enough well-trained agents in America to account for 3% or even 6% of total transactions, closed transactions. That's ludicrous. By the way, we know that the amount of transactions that happen could operate with far fewer agents. When you look at any MLS, you see that the top 10 or 20% in every MLS does 80 to 90% of the deals. And Zillow, what they've done is they've latched on to the top performing teams in these markets that have scale and the ability to work these leads. So I disagree with him on that statement. Now, he says we don't know what the conversion rate is. It's pretty easy to back into this math, Ben. Let me help you out. If we got on one of these Amazon gift card Zoom calls, I could have helped you out with that number. There's over 200 million online leads that happen every single year. Okay, and certainly in the last year that was the same. Over 200 million online leads. That's like all the portals put together. And then there's 4 million sales. Okay, you get 2 sides to each sale, so you call that 8 to 10 million. Okay, what's that? That's a 5% conversion rate. And by the way, that's kind of what Zillow looks for as a baseline to be in the program, is a bottom of like 5% on conversion. So the thing is, there's a lot of leads being generated. So it's not the conversion rate. And listen, they still do. They don't only do flex. They're still doing some market-based pricing. So selling leads is also a model that Zillow has, right? But not all leads convert. And to say that 200 million, online leads would convert in any given year based off the training of agents is kind of ludicrous when you always bounce between 4 and 6 million transactions in any given year. See, the issue is the way the portals can generate leads, generate somebody to get download some information or put their email and phone number. And now that becomes a lead when what is the intent to buy or sell could be 24 months out. Okay. So that's why there's so many leads being generated, but are they really, going to buy or sell that year? Of course not. So, he's saying they're not disclosing conversion rate. It's an easy number to back into. I don't think that's the problem with the Zillow model is the conversion rate. I think there's other issues, and he does make other good points. Let's go to the rest of his conversation here with CNBC.
Even though they may never convert these leads to revenue. So we think there's earnings quality issues there, and that's pretty concerning.
But there is an advertising story where they generate revenue, right?
That's a small part of the business, but ultimately page views on the site are going down, revenue per premier agent's going down.
Why?
Well, we think ultimately there's more competition, and one of the biggest stories now is CoStar, which is a company 3 times the size of Zillow, has put a lot of research into Homes.com, and you might have watched the Super Bowl. They're unleashing $1 billion advertising campaign with multiple ads. So Zillow's core business is under pressure. The regulatory regime for their customers under pressure, and ultimately the stock trading at 6 times revenues, we think should compress down to a low growth 2 to 3 times multiple to reflect, low single digit revenue growth.
Would you ever consider the idea that M&A optionality is a risk to your short?
We don't see Zillow as a takeover, particularly given the litigation overhang, right? I mean, that's a material issue.
So,
we've talked to people in the ecosystem that.
What he's saying there when they say, do you think there's a risk to your short for an M&A, merger and acquisition, somebody coming and buying Zillow? They don't see that as a risk. And there's really only one obvious person that could. He mentioned a CoStar that could even be the buyer. Realtor.com is 20-30% the value of it. They couldn't. I mean, I guess News Corp maybe could put a deal together to go, but that doesn't make a lot of sense. I really don't think that's a possibility. So, and I agree with Ben. It's like this isn't the time that somebody would come in and try to acquire Zillow. I don't think it's on the table in any fashion. You have a CEO who's a founder, and typically founders are going to fight tooth and nail on a acquisition.
That agree with us. And so I think an acquirer stepping in here would assume a lot of risk. Now, Zillow's also tried to acquire other adjacency businesses. They've had some fits and starts, but generally we think haven't been successful in M&A. And instead, they've been buying back a lot of their stock. Why they're doing that? Because they issue a lot of stock for dilution. In fact, 120% of their cash flow last year came from issuing stock. So they're spending over $1.5 billion just to offset dilution there. So we don't like that story as well.
What if they start talking about AI, making prices more
It's funny
more
how you get a laugh in the
accurate,
background on AI.
giving customers new tools and information, giving brokers. I mean, you could see how this could be an AI software transformation story.
It's a great question, one that we thought about. And, again, look at their recent 2024 investor presentation. They recently updated it after 2 years. There really isn't any discussion about AI and how that's going to increase their margins or give them more leverage. I mean, ultimately, we think the margin story is going to continue to disappoint. They're 20% off their target, and these are targets they've had for a number of years.
Okay, so there you go. You can I see this ad all the time. This guy with the crazy hair. I don't know what's up with that, but some financial app or something. Anyways, the AI thing. You heard the laugh in the background, and the CEO of Spruce Point Capital dismissed it. There's no talk of AI increasing revenue. While I don't think there's a straight line of like, this is how AI is going to increase revenue, I'd give Rich Barton a little bit more credit. 20 years of Zillow, they've been doing AI, using AI, such a buzzword now. They've been using AI before AI was a thing on anybody's mind, almost, in common circles. Okay. The Zestimate is technically it's an AI learning model, right? And so I do believe in the background, Zillow, I know with their integration with Follow Up Boss in particular, has some AI features, coming to the forefront. I'm not going and making the claim here that AI is going to transform Zillow, but AI is not new to Zillow. They're not like, Rich Barton. You go and ask Silicon Valley people about Rich Barton, they think he's one of the most impressive people of all time to come through Silicon Valley. They just say, why the hell did you pick the crazy industry of real estate? So I think that Zillow's got a pretty strong handle on AI. If anybody does in the real estate industry, I certainly would point to them as a leader in that space, or having a big opportunity to be, the leader in the end. Okay, now going back to something he said earlier about why page views are down on Zillow. He talked about the Homes.com competition, which is real, absolutely. Didn't mention the fact that the market is changing. Okay, the market right now is a lot different than it's been when you base Zillow's page views from the past to today. Well, of course you're going to have a decline. You have a decline in mortgage applications every single week. You have demand for real estate with the affordability and the price on the 30-year fixed mortgages going down every single month. So when you're down and out, and you don't have the opportunity to go and either afford or put the funds together to buy, do you look at more homes on Zillow or do you look at less? So I think the market also has a condition there, to be fair. Now, when you go to Spruce Point Management, some of their information that they've put out. I mean, one, they've memeified this thing. Look at this. More work, less commission. This is what Spruce Point Capital is depicting as the future for real estate agents. Remember, he said in that interview with CNBC, we believe that commissions are coming down. And so that's a position that is supporting their short on Zillow. I love the words that these capital companies use, these capital management. After conducting a forensic review of Zillow, an operator, again, but in their forensic review, I think he got some things wrong. I pointed them out in the video. I question, again, the boots on the ground research that they do, because a lot of these companies, I think it was to Justin Fox's point in the comments earlier, are offering like a silly gift card to get on a call. Like, and I've written back to a couple of these, or I had one of them on the phone. I said, dude, you want to pay me $10,000 as if I was coming to speak at your conference to share what I know? Send the check. I'd be happy to do it. Right. But they want to get the someone that's going to do the $100 gift card. I don't think that's money well spent. You see a guy from Spruce Point Capital, CEO and founder, who's poured money into this position. They're making a significant bet on this position that Zillow is, 40 to 60% downside risk, $23 to $35 share when it's trading at $55 today. That's the bet that they're making. So they've put significant investment behind this. So I would argue that you should have put significant efforts into, talking to the players that could have corrected some of those inconsistencies that you had on CNBC alone. They argue the report highlights several key concerns. Zillow's core business model under pressure. And I agree. Listen, I agree with that. The core business model where Zillow makes the majority of the money is right now off of the buy side of the commission. And it's under pressure, from the lawsuits. It's under pressure from the DOJ. So there is pressure on that side of Zillow's business, undoubtedly so. And it's why Zillow's talking about, getting super app abilities like connecting mortgage. Now, is Zillow going to go from portal to really mortgage company, generating traffic to go into mortgage? That seems like a stretch. So, to their point here, Spruce Capital, how are they going to transform in the face of the pressure that is coming down on their current business model. Evidence of additional business pressures, homes.com. And homes.com is not going to stop, right? And homes.com has a different model. Homes.com has a model similar to what you see in the UK, where you don't see a lot of buyer agency at all. Okay. I go into a really deep story with the #1 UK agent in an interview I conducted last week in Orlando. That interview is going to be going up on the channel here later today at 2:00. 2:00 today. Make sure you're subscribed to the channel. Hit the notification bell. 2:00. This interview I do with the #1 UK agent is fascinating around what is the portal situation? What are you paying the portal? He's paying the portal over $10,000 a month, and none of it is for buyer leads because they don't do buyer agency where he is. It's all for listing placement. Okay, listing placement. That's the game that CoStar, Homes.com plays in. So Homes.com is making particularly, an interesting bet here, similar to, I guess, what Spruce Capital is doing, shorting Zillow stock by running out a your listing, your lead model. They're going to charge agents a significant amount of money for that placement of your listing, your lead. Right now, it's very enticing. Wow. If a lead comes through homes.com and I have the listing, I get the lead. Well, just like Facebook and Instagram were once free, homes.com is not going to be free. And you see, many of you have probably gotten calls from homes.com. Become a member. You're going to get even more enhancement, better placement on your listings. Today's price won't be tomorrow's price. Just look at LoopNet pricing. And this isn't a knock on Homes. They've got a great model. They've taken over commercial real estate with this model. It's extremely profitable. It's a safer stock than Zillow's ever been. It's 3.5 times market cap. And that's what the Spruce Point Capital CEO was talking about on CNBC. They're a monster. They're a behemoth. It works. But what I am saying is reality. That price of your listing, your lead model is going up in the future, not down. They also believe that Zillow uses aggressive accounting. They have questions in Zillow's governance, including board entrenchment, lack of formal clawback policy, the compensation schemes devoid of firm financial targets. Okay. And again, there's the meme that Spruce Point Cap. I don't know what Spruce Point. Call the broke agent next time. Give a call to Bam. We'll get the broke agent on the job. And we'll get you a better meme than that. All right. There's the update on the Zillow short. Of course, you can get more information on this short inside of BAMX. We have all of the timestamps for you from the video if you need those, with link outs, all of the key features from the report in our show notes, which is uploaded into BAMX every single day, as well as today's next couple topics, which we're going to talk about employment and how that ties into Jerome Powell's testimony here, and mortgage applications. Those are the show notes for today. We do show notes 4 times a week on the hot sheet as we go Monday through Thursday, each and every single week, your 24-hour look back on housing. To get the most out of BAM, use code HOT to get 10% off of BAMX. You get access to the show notes and all of our charts and downloads each and every single day. Let's take a look at the ADP National Employment Report, just released this morning. It's a big jobs week, and we have more jobs data coming later in the week, but this is the ADP report, which says in February, we had a change in U.S. private employment of 140,000 plus. In February, while employment growth remained steady, pay gains for job changers accelerated for the first time in more than a year, rising to 7.6% from 7.2%. Job gains remain solid. Pay gains are trending lower, but are still above inflation. So Jerome Powell doesn't love that. In short, the labor market is dynamic, but doesn't tip the scales in terms of a Fed rate decision this year. So while you've seen private employment continue to be strong, you're not seeing it really change a Fed decision one way or another, according to ADP. Powell, though, of course, before his testimony today, which we'll cover in detail tomorrow, he wants to get out ahead of the political warfare that he's about to experience on Capitol Hill today. And he made a statement this morning before his testimony that reinforces his position that the Fed is not ready to start cutting interest rates. Okay, so while they've said we're going to cut this year and they expect that we will do it, we're not ready to do so yet. There's expectation that this is going to come in May. But here, as we sit here in early March, he wants to set expectations. He's going to get a lot of pressure from members of Capitol Hill to start cutting now. Of course, he'll get a lot of pressure from folks who are incentivized on either side of the aisle to see an economy that is more robust leading into November than it is now. Remember, a bad economy doesn't bode well for the incumbent. So there's going to be some political warfare for sure. We're gonna dig through all the crap that's kind of spewed on Capitol Hill, and tomorrow on the hot sheet we'll give you what you need to know, and in particular what you need to know about housing. But today's job market is strong, although it was less than expected. Private payrolls again up 140,000, but less than expectations. It's an increase from an upwardly revised 111,000 in January, but a bit below the Dow Jones estimate of 150,000. So we'll see more jobs reports later this week. Luckily, the 10-year is down a little bit on this news here today. We saw a 10-year that went down a little bit yesterday. So maybe, just maybe for the first time, we can get close to that 6.99 number. We're just over 7% right now. Let's take a quick look at Mortgage Banker Association application report. Mortgage applications, here's the good news today, are up, increased 9.7% from 1 week earlier, according to MBA. This is great news for buyer demand. While we saw consecutive week over week of mortgage demand, mortgage applications going down, we now finally see a week where it went up 9.7%. On an unadjusted basis, the index increased 12% compared with the previous week. The refi increased 8%, was only 2% lower than the year ago. And here's the big one. This is the one that I care about. I don't care about the refis. I care about the purchases. And we see, we don't see anything. That was crazy. We see the seasonally adjusted purchase index increased 11% from 1 week earlier. So making up some of those losses that we've experienced here in recent weeks, 11% jump on mortgage applications in just the last week on the purchases, on the purchase side. That's 8% lower than the same week 1 year earlier, but we will take it. We're heading in the right direction. The latest data on inflation was markedly better, was not markedly better nor worse than expected, which was enough to bring mortgage rates down a bit with the 30-year fixed rate. So down a tick, right? And so we're still up, generally speaking here, up over 7%, depending on personal finances and credit. 7.03% is where we came in yesterday on the daily survey. Love to see a 6 handle, once again, 6.99, a 6 leading handle, but that's where we are today. All right. A lot going on tomorrow's hot sheet with the Jerome Powell testimony, more jobs report information, and we'll continue to cover all of that. Also today, is today the webinar? Today we've got a webinar, and there's a lot going on today. Okay. So we've got the UK interview with the #1 UK agent later today here on the channel at 2:00. Today at 3:00, we have a free webinar. We'll put that into the comment. If you're watching the replay, it'll be in the description. We'll put it into the comments as well. The Fit Marketing Framework, how to generate consistent referrals and listings from your sphere. Luca Cree, president of Reminder Media, is going to be hosting that BAM webinar. Completely free webinar, one-time webinar, and we will also be posting that into BAMX. So if you can't miss, or if you got to miss today, the live session, you'll have it uploaded inside of BAMX. If you're a member there, of course, use code HOT to get 10% off of BAMX. All right, there you go. That is your hot sheet today. I'll be with you tomorrow as we have a lot to uncover. 9:30 on the East, of course, 6:30 on the West. You know the deal in between. Until then, toodaloo.